right, so together we're going to be reviewing a QQQ trade that I took this morning. It went for about 90% profit, hit our target, was very happy with how that ended up developing. And I'm not just going to start this by entering a trade and showing you that we made profit. I want to take it back a little bit, show you what we were thinking in the pre-market, what brought us to this trade setup, give you some more context, and then we'll go through the entry, how we managed the trade, how we got out of it, and hopefully that can be some value to you as we go through the whole process. So before open, you can see right here, this is about 9:15 a.m. Eastern time. At 9:30 a.m. Eastern time, of course, market opens. So some few key levels that I was looking at. QQQ is trading into all-time high, so we don't have much to work with up here in regards to previous price action or what traders have done the last time they were here because, well, we've never been here before. So for the first time this morning at about 8:30, we pulled into about 435 and we reached a high near about 435.5. So that is the first level that I marked off. Of course, it's not, I don't think I'd consider it a reliable resistance or an area where, we're guaranteed to see a good reaction off of. I'm just noting it because that is the highest that the Qs has ever traded, whether the market is open or closed, right? Just kind of keeping an idea on that level. So the more reliable levels are to the downside. We can see the high of the day yesterday on Thursday, right, all day from about 10:45 all the way into about 1:30 for multiple hours, unable to break over that 433.5 level. So I'm keeping that marked into the close, right? And of course, we see price break over that heading into the next day. So if the price is above this level, then I'm definitely looking for this previous resistance to be a support, right? Because when we were below this, price was getting knocked down from it. So if you were trying to be bullish or go long or buy QQQs into this level, things just weren't working out, right? 0 for 1, 0 for 2, 0 for 3, 0 for 4, and if you tried it into the end of the day, you got pulled down a little bit as well. So it was good to see that price broke over this, and heading into the open, the trade idea that I was looking for were longs, right? We have the market very bullish. We have the market moving above recent highs and creating higher lows, and it is very clear that we are uptrending. So I was not looking for a trade position to the downside. I was not bearish. I was not trying to buy puts or short the market. And if we did start to slide, right, maybe we could look for different opportunities at a lower point. So the best opportunity in my mind was a pullback, right? A pullback into this. Pullback into the previous day high where we had a lot of buying pressure here on the open. If we could get back into there, I would be much confident buying here and targeting this high from pre-market than seeing a bunch of buying pressure at open and feel like I'm really squeezing myself up here with an opportunity. So we can zoom in because I did trade this on the 1 minute. So as you can see, we're selling a little bit into the open, right? We pulled into 435, 435.5, starting to slide into the open. Now, as a rule, what I like to do is at least watch the first 5 minutes of price action, just because sometimes there is that opening suckers trade is what I call it, where you'll see a big, pull to the downside and then we'll bounce, or you'll see a big pull to the upside and then we'll sell off. I just don't like being caught in those moves. That's not something that everybody has to do, but it helps me be a little bit more patient. So I'm watching this on the Qs, right? I see that we have the high of pre-market. We also have a recent low in here, right? We have this lower high area that was acting as resistance. But the most important thing to me, right, whether I'm analyzing this trend or not, is what type of price action are we getting off of this previous day high, right? This green zone down here, once again, was that previous day high that we couldn't break above. So now that we've broken above it and found buying pressure off of it, that's what I want to see again to get into a trade. I just don't want to buy something because it's at a level. I want a little bit more confirmation to give me a little bit more confidence. So I'm waiting to get into this trade, right? I'm making sure that 433.5 holds, and we can see how price developed. Started to bounce off of it a little bit, and then we sold right below it. So at this point, right, I'm definitely not getting into a trade because I'm not seeing what I wanted, right? I'm not getting any type of confirmation. Continue to watch this play out, and now something that I definitely don't like is happening, right? I was looking for support right here. Highlight it yellow, but the top of that green zone, that's that 433.5, high of day yesterday. We saw support in the open a little bit, right? We tried to hold, but then when we fell below that level right here, you can see that we use that as a resistance. So maybe if we could get back above 433.5, you know, I'd be interested in going long. I'm going to keep an eye on that. So we start to break above, right about here, and that was a very quick move. Now, the reason I didn't get into a trade right from this point is because, one, we were touching that trend. And even if you think this may be a little bit questionable, right, which it is an ugly trend, but it did end up being reliable, another piece of technical that you could have used is the high of day, right? This is the opening candle, and we had a high at 433.99, so right in there at about 434. And then you see after we've bounced for the first time, right, we could get rid of this trend for now just to focus in right here. But when we got above this trend for the first time, or excuse me, when we bounced off of 433.5 for the first time, we pulled up, and then what's the furthest we went before we sold off even more? That same level, right? This opening candle right here where that white line is, pulled into it and sold off again. So if I'm pulling into this area once more, I know that, hey, we sold off here once, twice, it's high of day. We are having good strength off of 43.5, but I'm going to take it slow. Maybe I can find another entry later, or maybe I can get one soon with a break above and a retest, and then I can go long for that high of day, or excuse me, that high of pre-market. So I'm continuing to wait. We can put this trend back if we want, and we can see what the price action is in this area. Right, so we can see that initially, ever since we broke over 433.5, we had a good push, and the first red candle came in and saw a little bit of selling pressure right around that trend. Now the other thing, which is more important that we talked about, is that high of day. Look where there's some selling pressure showing up. So at this point, I'm thinking we do have an uptrend right now, but we still need to battle this high of day. So if we can break and hold over the high of day, then I view that there is enough upside potential, and if I can get a good risk to reward, I'm going to pull the trigger and get into a trade. So I'm patiently waiting right here. I see that we start to break out, right? We have the first close at 434. Let's see if we can get a little bit above that. Very strong candle, right? A very, very strong candle to the upside. That's something that definitely gets me a little bit excited. I'm waiting. I see the back test right here, and then you just saw it bounce. So at that point, when that candle closes, right, that 955 candle, that is when I took my entry at 956. And we got into QQQ 434 calls. So the setup looked like this. That was my entry. My target was up here at about 435.4, 435.5, of course. That's the highest we've ever traded, and that was the high of pre-market. So I know we might be able to go higher, but I at least want to be aware of that in case there's something like that again when we get there, right? In case there's selling pressure. So I'm taking my entry. Now my stop loss, which is also important, I'm not putting it all the way down at that 433.5 level because I don't want this thing falling that much before it gets invalidated. I would rather use the high that we broke out from. So I'm watching that 434. It was the high of day on the opening candle. It became high of day where we sold off more. We had a little bit of resistance and we just regained it. So if we lose that again, then I know that we might slip further. And I can use that. I can see that happen and get out of the trade before it really goes against me, right? That's the focus of keeping my losers small and leaving myself open to that opportunity of a much bigger winner. So here we get about a 1 to 6 risk to reward. Now I'm going to extend this a little bit just so we can get these tags out of our face. Looks like that's the farthest. Oh no, we're good. Thought that was the furthest we were going to be able to go. So we take our entry, right? And with the stop loss, I don't have a stop loss order. I like to manually manage it. If we do pull below, right, I'm going to pay attention to the price action, right? Because we could have a pull below and then a bounce out. And that would be one of those trades where you hit your stop and then it goes for a bunch of profit and you're like, oh darn, if I just waited a little bit or maybe, used a manual exit or even if you are using orders, right, maybe give yourself a little bit of space, something like that, something that you can do to keep yourself in that trade without having all of that drawdown. That's a very important thing. So I was just watching the price action at 434 if we got into it. Now, the other thing that I like using, you can find and watch trend and identify trend physically, right, by doing something like this, right, like connecting the higher lows that we have. But it's much easier to use an indicator that does it for you. So I personally like to use the 9 and the 21 EMAs. Some people use the 10 and the 20. Some people use, right? People use all different types of pairings. But the 9 is a small EMA, so that is close to the price action. And the 21 is a larger EMA, right? So that is less sensitive and usually further from the price action. And that's the yellow and orange lines in here. If you're familiar with EMAs, then needs probably no more explaining. But if this is something that is brand new to you, all these lines they're just showing me the trend. Moving averages are a trend indicator. There's more to it, right? There's strategies we can use, but this is just a trade rewind, not an indicator workshop. But that is something that I like to use to help me find the trend instead of, constantly having to plot it. So we get into the trade. Already see a nice little push to the upside. Now at this point, I'm already taking my first trim, right? We're hitting about 10% profit, taking my first trim out of that trade. I have no reason to get out of the full position, right? We're not at my target. It hasn't developed into a significant amount of profits yet, and there's just no reason to get out of this trade yet. It's developing in my direction. It's my job through risk management to not only minimize my losers, but to maximize my winners and try to stay in that trade. So I'm going to hit play. Great pull to the upside, and look at that, right? We already hit 435. So at this point, we're hitting about 45% profit very quickly. Now, that is about as simple as a trade as you get, right? We used technicals, we got in, we hit profit. You could have sold there, but that's 45%, and we ended up reaching 90%. So I'm going to walk you through how we were able to double our profitability just by being patient and using very simple technical analysis. So we have that rejection from 435. We've done a good job at trimming a little bit, trimming some more, securing some profit. Now let's focus on the trend. Because whether we're trading into all-time highs or whether we're just in a regular trade, my most focus wouldn't be the right way to say that. My biggest focus, right, is to make sure that if I'm long, right, we're creating higher lows and higher highs. If I'm short, it's the opposite, right? I'm looking for lower highs and lower lows because I like to use trend to keep me into a trade. So I see this break to the upside. I see my trend indicators, those lines following behind. And I'm thinking that if we do pull into those trend indicators, I want to see buying pressure, right? I want to see previous points of rejection to now be new points of support. So one thing that you could have been watching is, of course, the trend indicator in here, but also any area where we got resistance. So you take a look at this red candle, right, where we broke out. It was the first red candle since the breakout. Let's just mark that real quick and see if that becomes relevant. And we'll also follow the trend indicator. So I hit play. Very quickly we see selling. Now this is the exact moment where people will see a red candle, get afraid, get out of the trade, and they're still going to profit. But one of the biggest lies, one of the biggest misconceptions in trading is, you can't go broke taking profits. That is actually how a majority of traders do go broke, right? Because they're taking profits. They think it's good that they're winning, but the more important thing is how much do you make when you win and how much do you lose when you're wrong, right? If you have your winners be very small, like if you're a trader who sees profit, it goes against you and you take a small win, and then you're a trader that has maybe even the same size losses or larger losses, it's going to be very difficult to be profitable, right? The only thing that helps you in that situation is a much higher win rate. So when you increase the size of your average winner, then the ability to be profitable becomes much easier. So always focusing on how to stay in the position as long as we can. And that is usually done by not staring at your P&L, not being like, okay, well, I'm at 30%, so I'll sell here. I'm at 50%, so I'll sell here. I like to make my decisions based off of what the chart's doing. So in this instance, this 1 minute candle closes. As you can see, we're starting to wick off of that level that I put. We're also wicking right off of that 9 EMA. So I'm, of course, looking for a support here. I'm looking for price to form some type of floor. I have no reason to get out of the trade. If I'm emotional, maybe that did happen, but we're watching the chart, right? We're using technicals to stay in this trade. Continue watching. You see a little bit of a bounce there, a little bit of a bounce there again. Continuing to be patient. Now we slip. Now, although we slipped, was that enough reason to get out of the trade? If I'm using my trend indicator, no. Right? I don't think it was because we're still above that orange line, which is part of my trend indicator. So that was not a reason to get out of the trade. We're also in the green still, right? So we haven't pulled back to entry, and we didn't put a stop loss at entry. So there's no reason, whether we're looking at our P&L, whether we're looking at the chart, right? There's just really no reason to get out of this trade yet. The only reason that would get you out of this trade is if you started thinking and making decisions with your emotions. Now, let's say you weren't looking at this level, you weren't looking at the P&L, you weren't looking at the trend indicator. Maybe watch that, right? Because we're having big moves to the upside and pulls back, a pullback, a big move to the upside and a pullback, right? Let's see if we get some buying pressure in here. And let's also put back that trend indicator. A little bit of buying pressure, great, right? We're getting buying exactly where we wanted it. Trading's never going to be perfect, right? You have to have the ability to wait, be flexible, and let these things develop. If someone saw this candle close below that level and panicked, right, they would have missed the next move up. So we waited. We waited again. Then we started to see a push. And if you're waiting when it's going against you, then you can certainly wait when it's going for you. So at this point, we're pulling back into these highs, right? We're getting another opportunity to trim at about 40, 45%. And we do push a little bit more. So when we push, I do take a little bit off the table, right? That right there is my third trim. And I'm only playing that way because we're pushing into new all-time highs, and we did just get a very clean rejection off of 435. So if we get stuck under 435, all I want to do is reduce my position size a little bit. And that's not what you have to do, right? A trader could just, let's say a trader bought, 3 shares or 3 options contracts, right? Options in this instance, you buy 1, right? Or excuse me, you buy 3, you sell 1 to secure a little bit of profit. Maybe you sell another because you're getting close to your target. And then, maybe you hold that last one to see if we can develop into new highs. So you don't always have to reduce your risk all the time, but that's just part of reactive risk management, right? Is just deciding on a trade-to-trade basis when it may be good to peel back a little bit and whatnot. But continuing with the trade, a little bit more selling pressure. And yeah, that's ugly too, right? Definitely another candle that would have faked people out. But what are we watching, right? We're keeping an eye on this trend. And we can also keep an eye on it with the trend indicators that I have, right? We see that. But let's just even turn those off. Let's use 0 indicators here. Let's just only focus on the technicals, right? The price action and the market structure. So I'm glad I sold a little bit in here because, as expected, we did get a little bit of a rejection right around that 435. But we're still holding that uptrend, right? So I'm going to wait. Now look at what price did. Look at that level that we drew, right? Price bounced directly off of that. We continued that uptrend. We started to move over 435. And at this point, right, you could trim more. You could increase your win size. You could increase the profits that you're securing. And the trade ends up developing further. But the thing that is most important here is holding on to this breakout. So I want to show you what I was looking for. Besides that uptrend in there, one thing that I was looking at was this. We had some rejection in here initially, right there, and we were pulling into a higher high. So I have my high of the day. I have a lower high right here where we found some rejection. I have the low right here, and I have a higher low right here. So you can see that price has a little bit of a downtrend, a little bit of an uptrend, and we're consolidating right under that 435 level. So if you see this type of pattern, right, this is a continuation pattern, same as a bull or bear flag, any of the triangles. This in regards is a pennant, right? It's a continuation pattern. So what that means is that whatever price was doing before the pattern, we're viewing this as a pause and then continue. So continuation pattern is just a pattern that expects the breakout to continue in the initial direction that happened before the pattern. So if I know that to be true, right? I know there's not a 100% chance we're going to break out, but that is what I'm expecting. So if we do start to slide and we break down, then I can get out of the trade, still in profit. But I'm not going to make a decision right here, right now, because we haven't got a result. right? It's the same as looking at your P&L and making a decision, or looking at the chart and making a decision. So yeah, let's use the chart. If we break down, we'll get out. But if we break out to the upside, this could get much better. So remember, we still haven't hit a new high profit. We had 45% in here. We got to about 35, 40% again. And then we're stuck in this pattern right here. Now, the other thing that I focus on, not an indicator, but volume. That is the thing that is, besides price action, right? That is secondary. Price action is primary, excuse me. Volume is secondary. So I'm always looking at price. That's always like the most important thing when I'm analyzing the chart. And the second thing is the volume. And this is especially important when you are in a pattern. When you're in a pattern, you start to see volume flatten out or decline. And that's because people start recognizing that pattern. And what they do is they stop trading it. Why? Well, think about this pattern, for example, right? If it's converging on itself to a point, right, to an apex, then that means that every price swing, this to this, this to that, this to this, this to that, this to this, each of those lines are becoming smaller and smaller. So you may have traders, trying to go long right here into the high. You may have traders go short right here, but the volatility is decreasing, which means that the potential rewards that you're getting if you're trading within this pattern are getting so small. So there's not much interest in trading that pattern, right? So what I like to look for is a break of volume to the upside. So I'm waiting for that. I still get no reason to get out of the trade. And now look at how volume got really low, right? You can see how volume was pretty consistent. And then volume down here just dumped off when we started getting tight in the pattern. You could even see it with the price action. But once we started to get big candles and break out, look at how volume increased. From the lows, started getting high back into that zone. Broke out further, right? Look at how volume is increasing. Perfect increase as price increase, right? That gives me a lot of confidence. So at this point, right, you're pulling into about 60, 65% profit. You're already improving your profitability just by waiting a little bit longer. Now, I know the fear of, okay, well, if I'm waiting and price is going against me, wouldn't it be just best to sell at the high? Yeah. Hindsight's 20/20, right? If we know that that's going to be the high, then, well, we would just hold the entire position into that point and sell it all right there. But that's the importance of being able to be flexible with your position, right? Reducing your risk at certain points and leaving yourself open to the opportunity, not fully exposed, but open to the opportunity of this developing further. You've already secured some profit. If it goes against you, right, which is the low probability event because we have a breakup, we have a continuation pattern. If it goes against you, it's that low probability event and you can still get out and you still have a win. But the high probability event, or the higher probability event, is that this continuation pattern is going to attempt to continue in that direction, which means you could continue to increase profits. So you want to stay and at least wait for that reaction, right? It's not a 100% chance that you're going to break out, but this is why having an edge, this is why probability is so important. So we get that breakout, we have the volume breakout, have exactly what we're looking for. Here's another opportunity to trim. So let's develop this even further, right? Let's go all the way into 90%. Sell off right there, right? That probably scared some people. But remember what we're talking about. With the higher highs, with the higher lows, what am I looking for? I am looking for 435 to be support, right? Because this first breakout right here, the breakout that started right here, look what we did. We pulled all the way into 435, and then we got a rejection. And then we had to find these higher lows to break out of 435. So if that was the initial rejection, right, that's where we found resistance. Now that we're breaking over that resistance, we're looking for support. Previously, sellers were active there, sellers were active there, buyers overpowered the sellers. Now we want to see buyers off of this level. So I want to be patient and see the interaction here, right? I'm not just selling out and panicking out of my trade because it's at so-and-so percent or there's a red candle. That means nothing. What means more is what's happening. And what's happening is price is going higher and higher. It's having higher lows. It's having higher highs. And that means that you're in an uptrend. So it's your job to let that develop. It's your job to read that as best as you can. So I'm going to get rid of that line, right? We're watching that 435. I'm going to turn it green just because we're looking for support in here. And the other thing, right, is just bringing back that trend. You start at the lows. Look at how clean that uptrend has been. If you remove everything off the chart, look at how beautiful that is, right? That's also how you can manage the trade. That's kind of what we've been doing, but I've been going a little bit more in depth. You know, if you say, hey, I'll hold on to the rest of this trade unless the trend breaks, that could be a good plan. So back to action. Watching 435 as support, right? Not if a candle closes below, I'm still not panicking because I have the trend below, but I'm just giving it some room to breathe. I'm just seeing what the interaction is between buyers and sellers at this 435. We're holding. Nice. We're starting to get some buying pressure off of 435. Volume decreasing. Still going sideways. We're starting to curl up a little bit. Great. Nice. Now look, right? Now we're at new all-time highs. And now we're pulling into about 80% profit. And this is about the end. I mean, this went higher and it went on for a little bit more throughout the day. But as you can see right there, we pulled all the way into about 436. We hit that on the head, found resistance there, pulled into about 90% profit. And I think the trend starts to break down right about now. I could be mistaken. I don't remember every single candle. Yeah, so you can see that we start to bend, right? We start to finally break below that uptrend. But when you remove everything, the most important thing about this trade was just this. Was just the uptrend. And that becomes very, very easy to manage the trade when you're not making decisions based off of your profit and losses. You're not making decisions based off of your emotions. You're making decisions based off of the thing that you're actually trading, right? And you're trading the price of QQQ. And you're viewing the price by looking at these candles. So it gets a whole lot less emotional and less stressful when you manage a trade with that perspective. And think about this. Let's zoom out a little bit. Go to the 5-minute if we'd like. This big bounce right off of yesterday's highs. And that was the game plan heading into the open. Right? If we rewind into the open, we get rid of that trend. That's the exact trade that we were looking for. We said we didn't want to chase it to the upside. We didn't want to trade it to the downside because the market's too strong. We're going to be selective, and we're only going to get into the trade if we see something that we like. And we liked the thought of this coming back into 433.5 off of the highs from yesterday, right? So I hit play. And what did price do? We launched right from that level. Now, that's not to say that that's always going to happen, but that's part of trading, right? Is being there for the opportunity, getting into the opportunity. If you start to lose, if it goes against you, you minimize your loss. If it starts to go in your direction, you use technicals just like I showed you to maximize those profits and stay in the trade as long as you possibly can, as long as it makes sense, right? But that is about it. I hope you guys got some value out of this. Nice little rewind. And yeah, enjoy your day, enjoy your night. I'll see you later.